Okay, so let's get into it. Right now, let's look at the pattern structure. So this week, unless there is a reversal tomorrow, we are going to close with an important negative warning below that 78.6. So that means that this pattern structure is now warning negative, which that translates into, in this next weekly cycle, we have to be on the lookout potentially for continued lower lows and or at least a retest of the low that is forming and a struggle up in the resistance. Now, because this more the dominant, I'm going to call it the dominant or the major technical pattern here is still positive, you're likely to see buyers emerge, and there's going to be a battle between the bulls and bears, which could cause some likely wide price swings in Boeing. So I'm looking at 195 as a potential test. I'm going to do some fib draws here in a second in terms of fib extensions. For those of you that are wondering, if you haven't used the fib tools before, and we get a number of these questions, when do you use the fib extension versus the fib retracement? When you're looking at something that is trending, you're typically looking for the extension of that trend, and that's when I prefer to use the fib extension tool when I'm trying to understand a retracement. So let's just, for hypothetical talking purposes, say that there was a low forming, then I would use the retracement tool to see where that bounce could get to potentially, or how far the bounce would need to go to start to technically repair the damage that was done. So that's the difference between selecting those two tools. A lot of times I like to go in and narrow my time frame to get a better feel for the fib extensions when things are not as clear on, let's say, the weekly. I mean, I can see one here. So today we hit a 100% on the downside, and we came through that 78.6. We are entering, so not, I have a feel for the overall pattern structure, some levels here. I would say that, Katie, our initial support starts now through about getting down to, this is here, this is about 193 and a quarter. So I would say that there's an initial level of support that it should be forming. The issue is that we are entering into this period of risk. So a low could form at any point in here, but it also keeps a period of risk open where that the volatility and the bottoming process is apparent. So if I was looking, I would really want to see Boeing get outside of this period of risk or start to show some positive price action. The member mentioned that they were long and wanted to know where some key levels were and how long this could be in a period of risk. Well, the period of risk, we look at the variance of 3 bars to the left, 3 bars to the right. So essentially 3 weeks plus or minus when you're looking at the weekly chart, and then plus or minus 3 trading sessions when we're looking at the daily chart. All right, so that would be the first set of support. Then you really have risk of a deeper fall in Boeing that could get down to somewhere around 184. And then I would say that there's going to be some heavier buying interest if it was to continue on this type of decline. As you get closer to 183.50 to about 180.50. So that's where you would look to find some heavy interest. So right now, my overall bias is negative, although we have already made a significant move lower. That's another thing you have to ask yourself is, okay, this move has been fairly steep to the downside here. Do I have a trade on the downside right now? Well, I would want, if I was looking at that, I would have to understand that there's likely to be some bounce, some retracement of this decline, especially if we get into the support area. Maybe we rally up. So if I look at Katie, getting up to maybe somewhere between 210 and 216 would be an area of resistance based on where we are right now. I'm going to go over to daily. So the daily, obviously we have a negative pattern structure. Here was the low. We've already taken that out. So this is a left-hand translation. So what that means is that the peak of the cycle has occurred on the left-hand side, which is a negative indication. That means that there's likely that on a rally, the rally is likely to fail, and then that we would get more selling. And because this cycle goes out to the mid of October, there is that risk. This is that next period of risk for the daily cycle. And you really have all this time where you have risk. So the rally, whatever rally attempt occurs, there's a likelihood of a continuation on the downside. Now, if I try to find some levels in here, I already did that one over there. There's barely been there actually has not been a higher high, a decent tick up in Boeing at all. So if I was to draw something, Katie, on the downside, 190, let's call it 195 to 190.
Okay, those match pretty much with what you mentioned from the intermediate chart.
And then the sell zones, if you want to call it that, would be as you get up into the slim ribbon. So we could watch for a rally into the slim ribbon, and then you could look for a momentum indicator to suggest to you that it's rolling back over, like we had talked about. So that's the approach that we would take there.
So I have a question because this person's outlook was several months, not just
1 to
6
3 months.
weeks.
That's true. Yeah, it was a 1 to 3 month outlook. So that would put us.
And notice that earnings is coming up. So even just to do, like, for example, the November 17th expiration cycle puts you through earnings. Earnings is October 25th.
Okay.
So it would also depend on whether that person was willing to take earnings risk or not.
Right. Yeah, this is when you have a case of if you had so there was a long side bias with an outlook period of 1 to 3 months. And that puts us in a challenging situation because currently we have a negative pattern structure happening in both daily and weekly charts. Although this major pattern is positive, the better setup for this wouldn't be until we would get deeper. If you're going to play a test of support for a 1 to 3 month outlook, you'd really want to wait for that test of support, because what it's shaping up to be right now is that although there could be, because of the sell-off, a bounce, that bounce is likely to fail, and your better opportunity on the long side, if you're looking out 1 to 3 months, is coming later than right now. And again, I would need to see some more significant repair happening. So we might have to revisit this one because there really isn't a great long side setup, although there is short side opportunity. And if we were to look at something more on the short side, Katie, what would you look to recommend as it got back up into, let's say, some resistance? And I'll just do a quick. So again, I would use either the slim ribbon and some levels to give me a sense of that. Now it could keep just falling and we might end up at our target without really ever getting a chance to enter as well.
Sure. And so this is one of those situations where, if you're worried about that, then maybe you go with short premium because you can probably get far enough away. And then if
I
you
like it.
do get your bounce, you can add a long premium position.
I like that a lot, how we can talk about a multiple strategy approach to the overall technical conditions that develop.
It's kind of like what Slim talks about with adding, like you enter like maybe not a full position. Well, with options, depending on how big you trade, if your typical trade is a one lot sort of trade, then it's not possible to add a smaller position, to start with a smaller position because you're already starting at
Well,
one.
if you could look at it from more of a risk perspective, let's say that my risk is X on each trade. And if you take each trade in isolation, which you really should do anyways, or you can consider something to be a max trade of total risk, then if it's one lots, you could, like Katie said, you could start by selling some premium. And so why don't we give an example of that, and then let's
Sure.
talk about what you could do as it got up and the more directional trade appeared.
Okay, so I am going
resistance.
to take the screen.
Okay.
And we will go to, so that October 20th monthly expiration cycle is the one that is right before earnings. So, and it also just coincidentally, oh no, why did it switch to Disney? That's weird. Boeing. It also happens to coincide perfectly with that daily cycle timing window.
Okay.
So if you wanted to go, what was your, just because I'm not looking at the chart
Yeah, I
right
would
now.
say it's going to struggle. It should struggle above 215 would be a struggle.
Okay, and so 215, first of all, that's important because that's a one standard deviation move from where we are now. On Tasty Trade, you can see that with this dotted blue line.
Okay.
And it's also just beyond the expected move, which is this vertical brown bar. So if you were to simply just sell a call, a lot of people don't like to do that. It uses a lot of buying power, $160 in credit. So anywhere below, let's say a $25 wide spread would improve your lot in life there. So if you went out even to the 230, you've got a $15 wide spread, $1.22. And then, so let's say you do something like that. You've got an 82% probability of profit. You've got 14 short deltas, daily theta of 4. This is your risk graph. You want Boeing to stay below 215 or below your break even, which in this case is 216.22. You get that by taking your short call and adding the credit collected. So you want it to stay below that. And then once you got some sort of a signal, now this is kind of a trade where we're talking about maybe it just keeps going down. It never does get a bounce.
Right.
So this would be profitable in that case. Now
Right.
you could put this on, Matt thinks, based on the analysis, it starts to struggle around there. And even if it kind of went through there a little bit, let's say it gets up to 220, which is the top of that resistance zone, you're expecting it to then decline back into that daily cycle timing window. So it should come back in line.
Right.
You could give yourself more room if you wanted to be more conservative. You move these strikes further away from at the money, but let's say we move them to the 220. You're only collecting 70 cents now, and I wouldn't do that. So this would have to be at 215, 230. If you wanted to take less risk,
right.
$10 wide would still give you $100. So then once you got a signal, let's say you did get a bounce up into that zone, the resistance zone, and then you got a slim ribbon PO signal or a momentum signal on the lower time frame charts that indicated that it was going to continue its decline, then you could go into a more directional trade, which would be, again, depending on your style, do you want to do a debit? Do you want to just buy a put? I'm on the wrong side again. I keep doing that. Just buy a put. That would cost you $765, unlimited profit potential to the downside. Now, how far, Matt, do you expect Boeing would decline? What was the bottom?
The bottom,
Ish?
the first target was about
180-ish?
195 and then 190.
Okay, so 190. If you bought the call, your profit potential there, 190 is, if you just bought the call, that would be $735.
If you bought the
If you just, I'm sorry, if you just bought a put.
put, okay,
Yeah.
and that's when we got up near that resistance zone,
Right.
right?
If you got the signal and the trade
Yep.
worked out and it went to 190, you'd get around $700 if you held it all the way through.
And what was that,
Okay.
195?
Now you 190. It was at 190, you would have a profit around $700.
Okay.
195, your profit is around $225. So if you want a $225 profit potential, you could do, let's say you did a That should be a. So a $225 profit potential. If you did, this would give you, so, okay, if you did this $10 wide put debit spread, your
Okay.
profit potential is actually 560. But if you're only looking for 225, that's about 50% of max profit.
Right.
So, and now you're only using $440 of buying power.
It's a good comparison to see that difference.
Yeah, so you're using half the buying power. If you expect Boeing to drop to $100, then this is not your trade. But
Yeah.
if you're, being, sort of
No,
more reasonable
disciplined, more of a
with your
disciplined,
targets,
yeah. Yeah.
then, you can kind of play with these strikes and be like, okay, if I just bought the put, how much would I make if it went to this target price? And now, is there a way for me to get that same money by using less capital?
Right. Very good.
And so you can do them both at once. I mean, I think a lot of people have reservations around putting on multiple strategies in the same symbol in the, similar same expiration cycles, but it's a thing.
Please go to the askSlim homepage, hover over that Marketing Partners tab, and click on Tasty Trade. That will take you to a page where you can learn more about Tasty Trade, our preferred options trading platform. If you do decide to open an account with them through our link, that helps you with some special bonuses, and it also helps us.